Okay, okay, well, this is number 21. Which of the following decreases a partner's basis? This should be a pretty easy question to get because we really went through some drilling of this concept of what reduces a partner's basis. Cash distribution, yes, true. Non-deductible expense that flows through, yes, even though it's non-deductible. Release from partnership liabilities, if we get released from partnership liabilities, it's like taking money out. Yes. Answer D, all of the above. Partner Spence had the following items reported on a partnership schedule K1. What's the question? What's the basis at the end of the year? Okay, so we have to see where we are. He had a basis in his partnership interest at the beginning of the year, 23, so we're going to start there. So let's start there, 23,000. Nice color. What increases basis? What ordinary income does. So let's add 57. 57 varieties of Heinz ketchup. Interest income does. That's 4,900. We could have done this a little bit easier by just adding up the ones that do. Dividend income increases basis. That's 5,300. We're still going to have to add all this up. I'm just merely moving numbers around for no real reason. Guaranteed payment has been deducted from the ordinary income, so that really doesn't do anything. It's already been taken into account. Section 179 is separately stated, and so that reduces basis. And cash distribution, that reduces basis. Now I'm definitely going to need a calculator for this. Let's pull out trusty cell phone, get a calculator, and see where we're holding at this point. So if we do the math of what we have here, 23,000 plus, and the math gives us a net answer of 54,200. And therefore, answer C, 54,200. Again, the one key might have been just the guaranteed payment has already been deducted from ordinary income. So the guaranteed payment, although it's both deducted and separately stated, we don't need to do anything with that in calculating the basis. It's already been reducing the basis otherwise. This, the section 179, that's not deducted from the ordinary income. It is, however, a reduction of basis because it's an expense. That's why this works. Okay. Number 23 is a general rule. A distribution to a partner from a partnership is treated as guaranteed payment? No, not as a general rule. So that's like questionable. A reduction in basis and no gain or loss is recognized. Well, that's what I kept emphasizing in class, that's true. Ordinary income, again, did not indicate that is the general rule. Capital gain distribution, not generally, unless it exceeds basis. Answer B. We're done with number 23. Number 24, Sabrina has this $12,000 basis in her S&B partnership interest. She receives a cash distribution of 10 and equipment. And we had this in our homework. Actually, I think we went over this in a homework slide. I think I did this one. So I do recall that. So let's see how this works out. She starts off with $12,000 in basis. She gets 10 in cash as a distribution. So now she's down to, notice we do cash first. She's down to $2,000. And then we do the equipment. Well, the equipment had a carryover basis of $5,000. That's the carryover basis. However, we don't have enough to absorb it. We ignore the fair market value, by the way, because only on cash or relief of debt do we have the possibility of a capital gain. Equipment or other assets take carryover basis, as we're saying. This is debt. Cash or debt are the only exceptions where there could be capital gain. So here, with the equipment, it's only going to be carryover basis. But there's not enough to absorb the full $1,000 carryover basis, so it's going to be limited to the amount remaining. Answer B, $2,000. That becomes the carryover basis of the equipment in the hands of Sabrina. Cameron, number 25, has a basis in the partnership interest of 5. His share of partnership income is 5. He also gets a cash distribution of 13. What is his gain or loss? So let's see, do the math. 5 and 5, these two amounts add to his basis, giving him 10. And he's going to take $13,000 cash distribution. That's the key, because that can lead to a capital gain. It does reduce basis, and there's a $3,000 capital gain as a result of this capital gain distribution. So it's not in brackets. Answer C, capital gain. Okay, let's see how much further we can go. I think we can do the next 26 calculation, maybe a little bit something we have to construct. Let's see, we've got Jay purchases a 40% partnership interest from Art of Art and Bart. He paid $250. Ooh, we have a Section 754 election in place. So that means we get to book up the asset to the extent it relates to Jay's purchase. So let's see what we got. The book value is 100. Book value is 100. So we did the same thing. Didn't draw that too well. 100,000. The fair market value of the building, which is the only asset, is 625. And that sort of makes sense because I'll just use the calculator on my phone to make sense. 625 times 40% interest is exactly what he paid. 40% equals 250. So that's why we know he paid 250. It makes sense. That's the value of the asset. So the asset value that he paid for was 625, which means that the difference is 525, and 40% of the difference of 525 is what he should get to step up his basis in. Let's see what that is. Let's see if I'm even on the right way of doing it. 40% of 525 is 210. And let me explain what I just did. What he gets to do is he gets to recognize as his depreciable base of the building 40% of the fair market value of the building, because that's what he paid. He paid 40% of the fair market value. How much is that? $250. What do we do with that? Well, we take the $250, which represents what he paid for, but the partnership's already depreciating its basis, which is 100. 40% of that is 40. So his depreciable basis increase is going to be 210. Another way to look at it, which is how I looked at it at first, was that the difference between the depreciable basis as a whole, 100% in the partnership and 100% of the fair market value of the property, is $525,000. 40% of that, you guessed it, is 210. So the answer is D, 210. What does that represent? That represents the increase in the depreciable basis of the building in relationship to Art. That's a 754 election. That's what it does. Okay, let's see what time we're holding here. Number 27. Let's see if we can do it so we can make the last one, last go around, our last one of the evening. Okay, what are we looking for? What is Jerry's adjusted basis in his partnership interest at the end of the year? He's got 30% capital and profit interest. He's got his K1 came in. So let's see what happened. At the beginning of the year, his basis was 50. Ordinary loss of 15 reduces basis. Long-term capital gain of 3 increases basis. Qualifying dividends of 2 increase basis. 500 non-deductible of expenses. We've already seen that in numerous problems, that notwithstanding the fact that it's non-deductible, it still reduces basis. $10,000 cash contribution, meaning to him. It doesn't say charitable. I'm sorry, meaning from him to the partnership. It's the word. It doesn't say distribution. It says contribution, and that means he put it into the partnership, and a reduction of $4,000 in his share of liabilities. What's a reduction of one's share of liabilities? It's like getting cash out. Reduction of share liabilities is like getting cash out. So we'll put that down as a negative in brackets. Let's do the math. A lot of math here. 50,000 is where we started. Minus 15 plus 5 minus 500 plus 10 minus 4. 45.5 is the net. 45.5, and with any luck there'll be an answer like that. Let's see. And indeed C is there, and that's the answer. Okay, hold there. See you in a few minutes.